But if you've got, limited capital, maybe $500,000 of your free capital, and then all of a sudden you get a chance to control 100,000, just that goes up 100,000. Great. And if I can make 10%, that's 10 grand. That's more than, 2 months, and I've paid for my year's salary. So the excitement of the big money does, I think, force people into it maybe too prematurely.
So welcome everyone. Today we're sitting down with Andrew Lockwood. Andrew, it's been a long time that we spoke. I think it's been a year. So welcome back on the podcast. Good to be here again. Looking forward to chat more trading.
Well, thanks very much, Etienne, for having me back. I really enjoyed our last chat. It was about a year ago. Gosh, time does fly. But yeah, it's good to be back on. I see your channel is doing fantastic as well. Lots of great speakers on there as well. I feel quite honoured to be invited into it.
I appreciate it. So a lot happened in the past year. There's been new regulations. There's been different things happening. Tell me a bit more about kind of what's going on your side in the past year or so. What's new on your side?
Yeah. Okay. Yeah. Well, we've been running our prop and education space. I think it's been an amazing year in terms of the prop space. There's big changes going on there. Of course, we can talk about that. But we've basically relaunched our product. So we're still focusing on the trader education. Clearly, been in the markets for over 30 years. I think I've got quite a lot to offer in that. So, I think the education space. There's always going to be a big demand for people that can hold the hand of aspiring traders. So we've been expanding that, and a bit like yourself. We've our product is education and funding. There's not many out there, I think, Etienne, that are doing it like we are. We are getting people to where they need to be. So that's been good. And we've seen a lot of traders come in over the years, over the last year or so. So the industry is still very much alive. I don't know if that's because a lot of people are working from home these days, or 2 or 3 days a week they work from home so they can get away from the eyes of their bosses, and they do a bit of trading on the side. I don't know what's causing it, but certainly the industry is still very vibrant the way we see it, from where we see it. Certainly, we changed the prop. That's all looking good now. Prop space been crazy though, isn't it?
Definitely. I want to take a step back first and kind of ask you, with all these years of trading, what makes you, or what motivates you to keep trading these days? Like, what makes you want to stay in trading and keep doing this after so many years of trading?
I tell you, it's in the blood. I think once a trader, always a trader. I'll tell you a quick story. Last weekend, last Monday actually, it was my birthday, and my wife took me out for dinner. We went to the old exchange building where they had where they used to have the trading floor, right? The coloured jackets, Anyway, now that's all gone electronic. It's now sort of a posh restaurant with designer shops. And I was walking around that floor, explaining to my wife where I was standing, what we did, where I had the best trades, the treasury bond market, and I had the excitement, boring her to tears, no doubt, last week, but the excitement then that I still have today. So I'm still love the markets. I think it's something that will stay with me forever, even if I ever move away from business. It's something that just fascinates me. I've grown up with it. It's all I've ever done since the age of 18. So now I came into sort of like the education, the public arena, about 2015, 2016, and that really gave me another lift up as well, because certainly 2005, when it all started going electronic around the world, I'm sitting here with my screens. The kids are at school and it's quite boring, sitting here on your own. But when you get into the community and the online space, that's I find now sort of rejuvenated it all as well. So it's great talking to other like-minded traders. It keeps you sort of focused throughout the trading day as well. And there's always something going on, Etienne. I mean, there's always something going on. Last week, nothing going on in the dollar. Well, look what's going on in Bitcoin. I mean, look what's going on in gold, and obviously the stock market's hitting highs. So there's always something happening, always something to get your teeth into. So never a dull day. And I just trading will always be with me, I think, for me. Yeah.
One of the common beliefs people have is once you become a good trader, you've made it, and then things are easy from there. Tell me about the work you put in now to stay successful at trading and some things that people don't expect you to do at this level.
Etienne, when you say it gets easier, I don't think it matters how long you've been trading. The psychological aspect of trading is as powerful for me now as it was when I started. I mean, it's still something that's there. I mean, I would love to be able to say that I don't have emotions when I'm trading. I'd love to be able to say that, but it is, I think, nigh on impossible. It doesn't matter who you are, how experienced you've got. I think the emotions are there for everyone. I just think the longer you've been at it, the more you are equipped to deal with those emotions, and to avoid those emotional situations, where your emotions are heightened. So you just can control it more. So I still think it's a challenge for most, but as long as you can, aware of it and maybe avoid those circumstances, things. I don't do my checklists anymore, but I have my students where I insist that they do, checklists in the morning, psychological checklists as well as their trading checklists on their strategy. But psychology, don't revenge. I will not revenge trade. I will not, over trade. I will not risk more than X%. So all those things are still checklists that people need to do. I don't know if you remember, but I'm also a private pilot. And if you're flying an airplane, you have checklists, and you make sure you tick your checklist before you hit the throttle to the wall. So that's really important. And I think it doesn't go away, but it gets easier over time. But there's certain things you can do, obviously, to help you along the way, like the checklist, as I say, yeah. But you're always learning, Etienne, always learning. I'm always learning, and I don't ever think I've beaten the market. I'd never believe that. I like everyone maybe watching here today, you have your winning streaks and your losing streaks. I don't believe when I've had a winning streak of 4 or 5 nice trades and we've hit sort of 2Rs and things like that, I don't believe I've cracked it. I don't believe my strategy is any better than it was 2 weeks ago or a month ago. We all go through them. So I don't get overexcited now on winning streaks, and I don't tend to get over depressed when I have the losing streaks, because ultimately it all comes out in the wash, it all comes out in time. So that's what I find, so certainly, yeah.
Do the strategies change over time, or do the strategies stay the same in your case? Have you had to change completely from like one style to a different style, or was it pretty much the same thing all along?
No, I mean, basically I have two styles of approaches of trading. Clearly, one is trend following, and one is a counter trend sort of a style of trading. What I say, and I say it to all my students, is it's great to have 2 strategies, one for trend, one for counter trend, or even one for consolidation, 3 strategies, what have you. But for me, I don't like to trade them on the same time period, because I end up buying and I end up, is this a trend or is it not? Is it a counter trend? So for me, I trend intraday, but my counter trend is on the longer term. So 4-hour really is as you go on that, day strategies for reversals. And the day reversal strategies, I might only have 3 or 4 trades in a month. I mean, the yen's changing around today, so there's a few trades setting up today. But generally they've stayed the same over the years. In the old days, Etienne, and I do sort of tell this story quite a lot to my followers. I used to stand in the trading pit, okay, with a brightly coloured jacket. Everyone's buying and selling. When Goldman Sachs or JP Morgan came into the trading pit and started shouting, buy, 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 I generally was not going to be saying sell, sold, sold. Right? I was going with the big players, and that's basically where my trend following bias has come. Or if I can just go and grab my 5 lots, take them in and then knock them out a few minutes later, and that's great. I will be on the big side of the market, and even with the counter trend, using certain sort of price action at key levels, you can still also be on the right side of the market, following the big players, the institutional players, using certain price action. So yeah, I'd say it's really just the 2 strategies that I've been with me. I've made slight adaptations to them. To be honest, I know if the markets are trending up, if the markets are trending, any trend following strategy really should make money. Yep. Okay. It doesn't have to be so sort of complicated. I know when markets stop trending, trend followers are going to get caught. I mean, it's just the way it goes. I've adapted the strategy slightly for my sort of audience, if you like, because the one I was using was a bit, well, it's very similar, but it's just harder to get across to people that are looking at screens for the first time. So I've just made it simpler, quite frankly, to identify pullbacks and so forth, as opposed to using some other metrics that I used to look at. So I've made it simpler, I think, but the same sort of idea is there. Following a trend, never buying the tops or selling bottoms, waiting for the pullback into liquidity and taking it forward with a positive RR. Doesn't have to be hugely positive. One thing I found, I don't know about you, for me, trading big R's or a big risk to reward, I've always found that personally a bit of a challenge. You go for the 5-to-1, 6-to-1s. It's great when they come off, but you take quite a few hits before you get those. And I personally don't have the psychological makeup for that. So I'm a good sort of 1-to-1, 2-to-1. If I get 3-to-1, that's a real bonus. So I'm not a massive one for going for the big risk to reward, because of obviously the nature of the markets, you end up losing quite a lot before you get them.
I think I agree with you on that. I'm pretty much the same way. And for me, it's like 1-to-1, 2-to-1. I'm trying to get better at this now. I'm trying to kind of aim for the bigger targets with like maybe a little bit less risk. But it's definitely a tough battle. Yeah, for sure.
It is. Yeah, absolutely. Well, I tell you what, the other thing I say to aspiring traders is trading less sometimes is better. In fact, when I say sometimes, we've all read the books. We've all, understand the psychological challenges that trading is all about psychology. Well, if that is true, of which I think it is, but if that is true, surely it makes sense to trade less. Then you're going to be less psychologically challenged than down there on the 1 minute chart. And you're out of the market 30 times a day. You're just feeding the broker most of the time. But yeah, I mean, trading less, looking for the slightly better than 1-to-1s. Yeah, it's challenging, but that's, I think, the way that it should, that people should be thinking about personally, trade less,
I think one of the things that's been tough for some traders over the past years is like, you've got so many changing markets. You've got the Forex is less volatility now. It's different than before. You've got all these news events, the elections. Maybe it's something new. It's been the same way before, but it's like things that are happening that are kind of pushing traders to have to adapt and maybe even maybe change markets. Do you tend to change markets, or do you tend to go where you can trade the best, or do you tend to stick to what you know and stick to these assets work well already?
Okay, so I mean, I don't have a big sort of array of different trading entities. Obviously, Forex is what I got myself involved in when I went onto the screens for the first time, sort of 2005, really, from outside of the pits. And I was always a big fan of, and I still am, big fan of using basically strength meters and momentum meters, I call them, to get an edge on my side, trading, a strong currency against a weak currency. If you can see a currency or group of currencies, like say the commodity currencies, the Aussie, the CAD, and if they're all trading in a particular direction, and you've got the low yield is trading in a particular direction, the risk off, whatever, well, there's an edge there. So I will always be homing back to the Forex, trading strength over weakness to get the slight edge. Remember, you only need a slight edge and let it play out, let that edge play out over time. So that's always been my sort of bias that I've veered towards. But as we know, certainly, the markets are not always moving in a direction. Look at the dollar last week, pretty flat. I mean, nothing really going on in the dollar last week. Obviously, if you look at the weekly calendar, the euro dollar doji, opened and closed exactly where it was. It was just a flat week. Obviously, we had some data coming out in the latter part of the week, which basically put the dollar under pressure and yields lower. But generally speaking, if those markets aren't doing anything, I do want to explore something else. So I have got some interest in the European and the US stock market. So you're looking particularly at the DAX. And I think it's fair to say that guys in my trading room have really got me involved in that, because I was really just all Forex. And now there are a lot of them in there talking about DAX and talking about the FTSE and what have you, more so the DAX. So I'm looking at that a lot more. And of course, in the afternoon, you get some fantastic moves and some fantastic sort of technical analysis. I'm not going into all the different indicators, but some good technicals coming out in the NAS 100 and so forth, and in the Dow. So I'm looking really at stocks as an alternative to Forex when Forex isn't doing very much. So that's been good. I talk about Bitcoin all the time. I do own Bitcoin, which I buy sort of on my sort of wallet. I used to scale into them a couple of years ago. I've stopped doing it now, but I've got a little holding there. So I'm watching Bitcoin all the time. I don't actually intraday trade it, but maybe I should. It's a fantastic run at the moment, isn't it? I think it was just off all-time highs again, up another. It was up 20% last week, Bitcoin. 20% in a week. 25% at one point.
Isn't there any reason why you don't trade it? Because you would expect Bitcoin to be a lot less reliable long term than, like, let's say the S&P that you can just hold and keep. And
yeah, there is no reason. If look, when I say there's no reason, Bitcoin's been stuck at $30 for about a year. It just hasn't been moving. And anyone that's got into Bitcoin, for trend following up until 2 weeks ago, has really must be struggled intraday. It's only really kicked off again. I mean, I haven't got the chart in front of me now, but it's only just kicked off in the last week and a bit, with obviously the ETFs and the being allowed, and you've got all this halving coming up as well. So there's obviously more demand coming in, and that's why it shot up. So now it's moving again, but bit like the DAX. People in the room now are talking about it. Obviously, we can trade it on our platforms. So yeah, I mean, maybe it's time to get involved in that. But Bitcoin does seem to be a bit of a one-way market at the moment, which is great, of course, for trend followers. So yeah, I won't never say never, but maybe I'll get back into Bitcoin at some point. I don't get involved with those altcoins. I just don't really understand all that, to be honest. I'm not a big. I'm a bit older than you, so it's all a bit new stuff. All these alt stuff, isn't it?
I mean, I don't get it either. So yeah, you're not alone.
No, there's a lot of YouTube sort of traders in there that are getting involved in that normally, because it's all very hypey stuff. I used to say, if the school mums are talking about it in the playground, or the Uber drivers are talking about it, it's time to move away.
Tell me a bit more about prop firms. We've had a lot of things happen with prop firms recently. We've got, especially the last week, was really busy with the new rules and things, and the US traders and the last trade with prop firms, with the CFDs and things, new platforms. How has that impacted your prop firm?
A lot of putting out fires, even today. The team are putting out, customer questions and so forth. So yeah, I mean, for those that don't know, it all stemmed, I think, really from the US. All comes back from that debacle with my Forex funds sort of last year, allegedly, playing a not straight bat, and then of course the rumours were that the US are pulling out. The US are not allowed CFD trading, and so all the prop firms were pulling out of the US markets, and we stopped as well for a while, and then there was obviously the thing going on with meta quotes, which is still evolving with meta quotes, MT4 and MT5. So a lot of the props, including ourselves as well, we still do have MT4, but a lot of the props are moving into DX, and I looked at DX maybe 6 months ago. So there's a lot of migration sort of issues going on there at the moment. I think most of the props now are using DX, and then the US are going to be allowed back in to trade on the DX platform. But I don't know. I think DX have, I think they've got such a big sort of massive business coming their way at the moment. There's a bit of a teething issue there as well, I think. But on the face of it looks like a good platform. A couple of things that obviously some of our traders are not overly keen on at the moment, with the with the inability to use automation and so forth. But we'll see how it develops. I think I think things will change. But yeah, I mean, at the end of the day, Etienne, if you've got a green candle and you're buying, you're going to make money. If it's a red candle and you're selling, you're losing. It's not all about the platform. Generally speaking, that's not only for my generation, but generally speaking, people don't like change. They're all moaning. I think I've spent about 10 years people moaning to me about meta quotes, MT4 and MT5, all moaning about that, and now people are being forced to move into DX and so forth. People are moaning about that. So I think once people have got sort of established with it and maybe done some education on it, it's not a bad little platform, and it's basically the way to go. So yeah, I'm excited about it. It looks quite nice, but Yeah, a lot of changes going on, but I'm a firm believer, that the prop space is here to stay. It offers a value to the aspiring trader, to well, not only the aspiring traders, but to traders that don't have maybe the access to that capital. It's not going anywhere. It's just going to change a little bit. And if we look back in 6 months' time, we'll look back here to beginning of the year. We'll look back and say, well, hasn't prop business just got better? And so I'm confident about that. So we ain't going anywhere, I don't think. The prop space, it's going to be an exciting time ahead, and it does open up opportunities, doesn't it, for everyone that wants to get themselves educated and get themselves trading. Because quite honestly, it's, I think, apart from maybe flying seaplanes, which I did a while back, but I think it's one of the best jobs in the world if you can master it or make a living out of it.
Is there any reason why you didn't move away from MT4 and MT5 and went to DX trade? Or especially from the trader who thinks that they might go with you and then maybe like in a month's time it's going to be DX trade because they have to change? Or
well, there's no other reason apart from the fact that it's an ever-changing environment. So meta quotes are they're making some strategic business decisions away from props and what have you. I think they're drip feeding it out. Obviously, I can't speak for meta quotes because I haven't actually got on the phone to them. They don't take my phone calls. I go through our broker. But we were actually looking at DX 3 or 4 months ago before all this started kicking off. So offering alternative platforms has always been a focus. And so we were looking at them. Now, obviously, there's an acceleration into it because of circumstances. But yeah, I mean, I personally would like to be able to keep the meta quotes MT4, MT5 as an option. That is the plan. But if we get our hands chopped and told to move, then obviously we'll move, and we're all set up ready for that should it happen. I do know, some even now are selecting DX over meta quotes. So yeah, I think having the option for choice is great. But if that option is removed, well, we'll just have to increase more platforms down the line. So, but as I say, if you can trade Etienne, it doesn't matter what platform you're on, quite frankly, unless of course it's just heavily automated and HFT stuff, which is hard to do on DX, I think.
One of the comments I got a lot in the past week is people saying, "Oh, the government is just trying to shut the prop firm down. It's not going to allow people to get more capital for trading." Is this a valid concern, or do you feel like that's something that can be easily addressed and fixed, and then you won't ever talk about it again?
I mean, the US obviously. I mean, they allow prop trading, of course, on the futures. The US has always been heavily regulated, in finance, and rightly so. When you've got the likes of Bernie Madoff and crypto, whatever his name is, Bankman-Fried and what have you. So there's definitely a need for regulation. Whether they want to keep it all on their shores and they don't want the speculation, they want it kept in the futures market, which is obviously speculative anyway. Whether they want to keep it all close to themselves, where they can monitor it more, may be the case. I don't necessarily think they want to stop prop trading. I just think they want to have more control over it. And when you have all these offshore companies selling products into the US, I think they lose control, and MFF was an example. I think they had 130,000 global clients. A lot of which were in the US. They were controlling that. That is obviously taking money out of the regulated exchanges in the US. I mean, that's fact. I mean, the CME, the futures markets, will obviously lose volume to CFD traders. So they're stopping CFD traders to keep it all onshore. And of course for the regulation as well. So, but I'd say, I mean, there'll always be. When we had in the Eurozone a couple of years ago, they had all these changes to leverage. Right, the US has always had 50-to-1 leverage, and in the UK and in the Europe, you used to be able to get 200, 500-to-1 leverage from regulated brokers. And the ESMA, they changed all those rules to really cap down leverage, and everyone was thinking this is the doom and gloom, this is the end of CFDs, end of leverage products and what have you. That's 2 years ago. No one even remembers that now. I mean, it's just we move on, we develop, and we evolve, and I think this will be the same with the prop space. I think it's a part of an industry you can't take away. There's a huge desire for it, and people will find a way to offer it, and I think that's right.
I think it's just going for the better. It's kind of finding a way to adapt things, make them more legit too, like having less bad players in the industry, and that's a good win for everyone.
Absolutely, you got lots of them sort of like setting up, just sort of sitting there in their dressing gowns in their little rooms, and it was they're popping up all over the place, and people offering ridiculous rules to make to everyone to pass. I saw one recently. I think it was a 8% profit target with a 15% drawdown. I mean, flick a coin, anyone can pass that. But the rules they've got to be restrictive enough that that are realistic, but also they've got to be relaxed enough to make to give people a real shot at it. So but yeah, it's good to see the changes going, and I think in time, for us that will be in the new world, it'll be better for all, I think. The other thing about prop trading is not just about, I know your business as well, the desire to trade. It's not that I've always said there's three points to trading, right? A three-legged stool analogy. What you need to be a successful trader. You need education, yeah. You need education strategy, yeah. You need psychology, and you need funding. Okay, so all three are vital. You can't be a trader just because you've got access to capital. You still need to be able to trade. You still need to have control over your discipline and emotions. So products like ourselves, where you offer the education as well, to generally get people to change their futures, change their lives. I think the cream rises to the top, and I think that's why the industry will always have a place for people. People like us, I think.
The people you talk to who take prop firm challenges, do you feel like they take them too early in their journey? Like, do you feel like they take them before they have the right mindset or before they have the right strategy? They go for the prop firm.
Yeah, I agree. They do because most of them. Like I say, most I can't sort of categorize them. But if you've got limited capital, maybe $500,000 of your free capital, and then all of a sudden you get a chance to control 100,000. Just that goes up 100,000, great. And if I can make 10%, that's 10 grand. That's more than, that's 2 months, and I've paid for my year's salary. So, the excitement of the big money does, I think, force people into it maybe too prematurely. That's fair to say. And I would say we've got challenges up to 250,000, which we've capped. And I say to people that are coming into ours, and if you're completely new to this, you don't need to be starting on 250. I know before I was trading prop money of my own capital, when I first came onto the screens, I knew that when I got above a certain amount of my own accounts, the emotions change even for me. You're trading a large account, and you've had a bad day and you've lost the price of a small family car. It used to be sort of, the emotions were becoming heightened with a bigger capital. And, I always say to people, start off, 25, 50. I mean, something like that. We even go lower. I mean, for for people that really want to trade, from the, start from the beginning, we start at, I think we start at 10,000 now. So yeah, I think, just because you've got the access to capital doesn't make it that you are going to be a trader. But I've had also people in the past, funny, I don't know if you get these, but basically playing the prop firms, right, where they will go massive in risk to get their assessment, and then quite happy to blow up the assessment, and then and then take it more seriously. So they're trying to play the props, and they're quite happy. I mean, one bloke, I think he took about 15 challenges before he finally got funded, and then he went all in. To get the funding, and then he's got his funding account, and now he's trading sensibly. But he's spent so much money on prop assessments. I mean, that's his business model. Actually, I think I saw something on MFF channel before they took that down when they interviewed the guys there. And the CEO, said that one of the guys had just got 160 grand payout from MFF, but he spent 130 grand on prop assessments. Okay, bit of a return on investment, but I mean, people just play the props, some of them. I mean, that's not obviously what we are about. We want to create traders as opposed to people that are trying to manipulate, the prop space.
A lot of people expect too that if you have a good strategy, you can go from like 0 to a million in like a week. Like you can just go and take a big challenge and like pass it and then be done with it. In reality, there's like there's the pressure, there's a mindset behind it. You might not be able to like adapt quickly to trading $1 million right away. So that's all a lot of pressure.
I agree. That's why, you know, scaling it up, taking it slowly. My opinion is this. I mean, I've been at the markets now since I was 17, 18. You know, it's my career that I've had throughout my life. If people are looking to have a career to run alongside their existing career or to do this full time, you know, you don't need to be. It doesn't have to happen this weekend. It doesn't have to happen next week. Chances are, if it happens, if you need it now, and you've got to pay the bills, and you've got mortgages to pay or rents to pay, and you need it to work, chances are it will not work. It's those that don't have that pressure that can do this, that are creating a career for themselves long term, that have got the time and the patience and the respect, that are more likely to succeed, in my opinion. You know, it's one of the things I ask when people, you know, when we come onto the private mentorings, and I talk to them. I said, you know, what's your game plan? You know, they do a sort of business plan of what they can see themselves doing in a year, 2 and 5 years time. It's, you know, it's a longer term plan. If you do, I don't know if you went to university. I certainly didn't, but my daughter's at university now. She's doing a degree. It's 3 years. I mean, you know, and the other one wants to become a vet. That's 7 years. You know, so to learn that career, people think they can come into the finance markets and become a trader in a couple of weeks. Ain't going to happen.
What advice would you give to those who want to specifically trade for a living? They want to, of course, like be profitable traders. They want to trade well, but they also want to make it like their full-time income. Ideally,
you start off alongside an income where you don't have the pressure to pay the bills, because trading in itself is pressurized enough in terms of the psychology side of things. So ideally to have something to run alongside. I think, you know, setting out a roadmap, you know, a plan, like setting up a business. You know, anyone that sets up a business, you need to have a business plan. What is your plan? What do you want to achieve in a year's time? What do you want to achieve in 2 years' time? And basically work way back. You know, but you know, there are 3 aspects to trading. You do need the funding. You do need the strategy and the education, I think, and of course you need to be in control of your psychology. So you certainly need to get educated, I think. I don't, although I've got, you know, quite a big following there on the other YouTube channel, I don't personally think you can learn to trade just by watching YouTube videos. I generally think that you need, you know, a bit more than that. You know, I think you need to be involved in communities. I think you do need to have, you know, proper sort of coaching. Really, I'm not saying it's essential, but I think it's, you know, if you'll spend a lot of time and money doing it the other way, I think, but getting yourself a proper educator, you know, people that have been there, done it, communities and so forth, I think that really helps. And to have realistic expectations, Etienne. Realistic expectations. I mean, I think it really does boil down to that. So many people in the past have thought this to be like an ATM machine, you know, and it isn't. You know, 2-3% a month, you know, consistently. I'm not talking about 1 month, but 2 to 3% a month. We target 4 or 5%, but most months don't hit 5%. But you target realistic expectations, 2, 3, 4, 5% a month. You know, you've got a couple of $100,000 account in 6 months' time or in a year's time, then you have got an income from it. So realistic expectations and a business plan, I think, Etienne.
What can people connect with you or find out more about your work if they want to see what you do and either trade with you or get funded or work with you?
Yeah, you just head over to the City Traders is my company. If you YouTube me or you type that in, you'll get to me. I had a previous world where I was working with, so I got the big followers on the YouTube. Some of those videos have got 4 million views. So if you YouTube me, you'll come up with either that site or this site, but it's all still me. So head over to the City Traders, and you can engage with us there. We've also got Discord as well. So we're in there chatting throughout the trading day as well. There's a premium area, of course, for education, but the Discord itself is free to engage and chat. And I'm sitting there watching it all the time, chatting. We're talking about some yen setups today. So, yeah, they can get me on Discord and City Traders. Yeah, but happy to explore further if anyone wishes to.
Awesome. And we appreciate your advice and the time you give to traders here. I really appreciate it. And hopefully they can reach out to you and connect with you. And it's good to have people who take it really realistically and like take things the right way too. And share this with traders is pretty awesome. So I appreciate your time and the advice you gave to my listeners here.
Oh, well, Etienne, as always, thanks very much for having me on. I do value, decent people in this business, people that offer value and offer service as opposed to the oil charlatans. I'm on your channel because I respect you and what you have done as well. So I'm honoured to be here and look forward to the next invite.